welcome to this edition of the CU Town Hall. It's the 112th edition. It's Wednesday, February 28th, 2024. And let's go on to the next slide here while folks shuffle in, if we will. I am John Best, and I am your host for today. And I'm not sure if Mike's going to be with us, but I know Glenn will be, and so we'll get into it. But for those of you that don't know me, I am the CEO of Best Innovation Group. I've been in this industry for a long, long time and had the good fortune of working with many of you on the call, I'm sure. And also, usually with me, if he's not here today, is Mike Lawson. I'm guessing he's out at GAC digging in right at this point, since it's so close. He probably flew out early and is trying to, cop a squat somewhere on one of the corners. So, because I know he doesn't get hotels, he sleeps in the tent out there. So, but anyways, let's go on to the next one and let's talk about our sponsors here. First, we'd like to thank CUNA/America's Credit Union. I know GAC. I was talking to David Rohn and the group that runs that, and they're telling me that this will be the highest attendance they've had since pre-pandemic, and I told them I think it's because people think there might be a fight that'll break out, kind of like the Jets and the Sharks between NAFQ and the CUNA staff. So, just that's how I picture them doing it in the hallways of the conference hall. So, no, I think everybody's looking to see what this consolidation looks like and to see, how it all comes together. So, very exciting. And for those of you that are going to GAC, I think I have a couple nights where we're meeting up with some folks, and so I'll be out and about. So I think Melissa can post that. But if you haven't been, love to see you there. Make sure you stop by Mike's booth. He's got like a place where he's interviewing folks, which is always exciting. And yeah, Glenn and I will be hosting a CEO kind of roundtable collaborative discussion on Wednesday morning, I believe it is, Glenn. It's
actually Tuesday morning.
Tuesday morning. Yep. Excited to do that. So then we have our next sponsor, Illuma, and Melinda and his group. And they were so helpful last week in giving us our giveaway, the speaker. So hopefully whoever won that got it. And if you've got the issue of just trying to deal with what's about to happen here with all these different things, there's a lot that you can do with Illuma. I know they've been talking to MemberPass, one of our favorite, products out there. And I just believe that you've got to get into this because the future's changing fast. As a matter of fact, I'm digging through a lot of fraud right now, and I'm very concerned. And then there's Typhone, our newest member, Keith Riddle and his group, but Keith Richards as well. They're part of it. Very excited about Typhone joining us. They're really working hard on the idea of a whole new kind of concept with digital services. And their first product platform is going to be a FedNow product. And FedNow plays, I think, very prominently into the payments world going forward. So check out Typhone at typhone.com. Let's keep going. All right. So we're going to talk about this Capital One Discover deal. And we're honored because we have with us someone who was around for some of these initial things, which is John Ainsworth, who can also give us some feedback. But here's what I know about it. I know that these two together will make I think, one of the largest credit card companies in the world, because they were already both the largest together. Together, I think they eclipse everybody else. I think that the government's certainly going to have to approve this because it does seem sort of in that space. And other than that, I don't have a lot of details. So I was going to shift it over to Glenn and kind of interview Glenn about it. So Glenn, talk to me a little bit about what you've learned about this, because this is totally in your wheelhouse.
Yeah. So first off, the thing that I love about this is it's basically two transactions in one. You've got the credit card portfolios of Discover and Capital One coming together. And then you've got Capital One acquiring a whole payments network, which, they're very different dynamics of those two sides of the deal. And as I sat in on the investor call, which had both, it was mainly led by Capital One's CEO, Richard Fairbank, but the Discover CEO was on as well. And he made a point very accurately that these are pretty rare assets. There aren't a whole lot of these on the market that you can buy. So it's pretty unique. I've not seen anybody who's done this analysis. It would kind of be speculation unless somebody could kind of dig into the dumpster outside Capital One and find their models that they did trying to determine what to pay for this. I'd love to know how they would parse out that $35 billion price tag between the value of the network and the value of the card portfolio. To your point, John, it's currently, right now, Capital One is the fourth biggest credit card issuer. Discover is number 6. You put them together, they will be number 1 in terms of credit card outstanding balances. If you actually look at it in terms of actual transaction volume, they'll still be third. They'll be behind Chase and they'll be behind American Express. Now, one of the things I find interesting there is just kind of from a proportional standpoint, that means that both Capital One and Discover's customers tend to carry more of their balances as revolving debt, as opposed to just, interesting question about the tax nexus. That I have not heard that one either. I have not actually gotten into the tax considerations at all. And maybe once we figure out if things going to go through and pass legal scrutiny, we'll start dealing with those things as well. But yeah, I think you make a really good point, John, that there was a really good interview. I'll find the link if anybody wants to listen back to it. Raj Date, who used to be the number 2 at the CFPB, did an interview on National Public Radio a couple of days after the acquisition was announced. Really interesting to kind of hear him sing a different tune now that he's an investment banker. But I thought he was extremely level-headed in terms of the way he laid it out. But at the end of the conversation, where he basically said he doesn't expect consumers to see a lot of difference from this, but he did say, approval is kind of a coin flip. It's kind of hard to say, and it's pretty much a political question, probably even more than a regulatory, kind of typical mechanical one. But having said that, if you think about it on the card portfolio side, I think there might be better reasons for the Federal Trade Commission to maybe get involved when you take number 4 and number 6 and combine them. That's a pretty big piece of concentration in a relatively concentrated market. If you look at the other side of it, from the idea of picking up a whole payment network and putting a whole bunch new volume onto it, Capital One has basically announced that if and when the deal is approved, they're going to move all of their debit volume onto the Pulse network immediately, which makes Pulse, which is part of the Discover, will make Pulse a bigger player.
Let me stop you there. Let me stop
you
there, because that's a great spot, because we happen to have one of the guys who basically invented Pulse on the call, if he doesn't mind speaking. John, do you mind talking a little bit about this?
No, not at all. Good to be with everybody. And this is fascinating to me. GB, as you mentioned, this is, kind of a decade in the metting, and certainly, appreciate, Glenn, your comments and observations. But for me, that debit network is what is really probably an understated part of this proposition. And, you've always got loan income, you've got the need for deposits, and then it's always about interchange and income and routing. And so, the ability for them to have more effective, efficient transactions is a really interesting piece of the puzzle,
And
so your feeling is Pulse was the, sorry, Glenn.
No, you go ahead.
Your feeling is that the primary reason for this purchase would have been Pulse?
I think it was definitely a big factor. And what's interesting, so, FIS is actually the processor for Capital One on the debit portfolio, which, you've got NICE and so forth involved as well. So the processing and the routing are interesting pieces of the puzzle,
Now, was it Pulse and what was the other one? Cirrus?
Yep.
Those were like basically East Coast, West Coast for a long time, right? Because one sort of cuts solid. Go ahead.
Well, you may be thinking, so Plus was the kind of the Visa equation, right? So that was the Visa ATM network. Then you had Cirrus for MasterCard, but then you had Pulse, which was really that kind of super regional. So, what kind of evolved from that were these kind of super networks, if you would. And again, right now it's everything about routing. And, then you got into things like pinless bill pay and kind of the innovation of trying to expand those kind of regional ATM networks, if you would, and not to get too clunky or technical, but the biggest thing for Capital One again is they can basically route to whatever merchant they want, and not have to pay the traditional fee incomes they would as, kind of a traditional issuer, if you would.
Would that also give them more leverage for, and Glenn, this is where I'll let you pick up, but give them more leverage for, battling interchange on behalf of their merchants and with the issuers and and the issuers as well? Is that, and Glenn, maybe you want to comment, and John too, but is that really the impetus for this?
Well, the one thing I do know, I'm not sure exactly about, exactly what it would mean from an interchange. Obviously, they get to, actually benefit further from the interchange too. But the other piece that was mentioned is, Capital One shopping. This is also another avenue for them to create deeper inroads with the merchants, because they're looking for that whole piece of the equation as well, that they want those merchant relationships, whether it's, just as endpoints in the network, or whether it's part of the whole proposition of Capital One shopping, which then drives more transaction volume too. So, from a holistic standpoint, all of those things make a whole lot of sense. John, anything to add on that piece?
No, I just think, Rob's question about, kind of diversification, I think it was Rob's, in terms of, how do you basically pay for the transaction? I think, from an investor standpoint, all of these have different, components. The only other thing I was going to mention routing, is, there's an interesting piece of legislation about this dual routing requirement. And so, what they could pick up is a lot more of the traditional transaction volume. But I think diversity of the deal is probably the point I was going to make earlier. It's not just necessarily about what you would see on the face of just credit cards,
The other
So
piece.
I got a quick question I want to ask the two of you. So hang on a second.
Yeah.
Can I share my screen real fast? I don't know who's sharing, but if they could stop. All right. So I want to show you something that I'm curious about. So I don't know if you've seen this. I noticed this like a little bit last year. I don't know if anybody else has seen this either. Let me get this out of the way. So this is my Discover card in my Amazon account, and look at the difference here. So this is my default one. Yes, I'm using my default as Ent Credit Union. If there are any Ent people on here, but if you look at the Discover one, check out how it includes this rewards point and the link. I don't think Capital One does that, so I'm curious, like, well, these sorts of things, like what's the surviving brand? Like this to me was actually really cool. I'd forgotten I even had rewards points, and the fact that I could spend them in Amazon made that pretty valuable. So I don't know, you guys able to see that, right?
Yep, all 43 cents of it.
Yeah, what's that?
All 43 cents of it.
Well, yeah, I spent it. But once I learned I have it, then yeah, I'm always spending it. But is that something that's also like these merchant relationships that Discover seems to have, where they've got these deep connections that'll be valuable, John? Oh, I think he's on mute. Go ahead, Glenn.
I'm not sure I have a perspective on that one. I haven't gotten into that level of detail on that, but yeah, the pieces of the pie. And the other piece that I find very interesting, Elizabeth Warren kind of predictably, came out against this deal pretty much immediately. I think Maxine Waters did too, and I think that's from a standpoint that both MasterCard, or rather Discover and Capital One, tend to work with a mass market and or subprime market occasionally. But so, to the extent that might leave one less player in that space, I keep waiting, and I've yet to see anything that Senator Dick Durbin said, because this feels to me like a market-driven kind of solution to what he's been trying to put forward with the Credit Card Competition Act. Because suddenly, if what becomes either the first or third, depending on how you look at it, credit card network in the country starts moving all of their credit card issuer starts moving all of their volume onto the Discover network, suddenly you've got a much more viable player, in competition with Visa and MasterCard. American Express is still going to be bigger than Discover, even with all this volume, but it certainly changes the equation to some extent.
Well, let me go back to what John said. So, John, if I'm understanding you right, when you use when they have the access to this network right now, in order to reach, say, a particular merchant, one way or the other, they have to go through, say, NICE or something else. And every time they hit one of these pops to get to this endpoint, they pay, right? they
Right.
pay a little bit depending on the size of the
Pay a
transaction.
toll, right.
Right. So if suddenly they don't have to pay these tolls, um, what do you think I mean, I know these numbers are massive. What do you think the savings is for Capital One by owning this?
It's a great question. And while I was on mute, I was going to echo Glenn's point. I really haven't had a lot of time to kind of discern the acquiring piece of this, but the reality, it works like a private label network. We were commenting on the opening statement around Sears. If you're the issuer and the acquirer, then you're not effectively having to pay the third party networks for the routing. So, it'd be an interesting analysis on the actual savings, but it's a pretty interesting piece of the puzzle, again, in terms of that kind of diversity of the investment.
Yeah, because that leads to, like I said, back to the Durbin point that he makes is, okay, if they're circumventing these fees, like so I guess what I'm getting at is if let's pick one of these competing networks, John, who's a network that's stands to lose from this deal that right now is probably getting these transactions routed to them and taking a small piece every time they pay.
Great question. I mean, it's all of the above, but the one that comes immediate mind is NICE. I mean, if you think about, the other kind of networks, at least on kind of the PIN debit side, they're probably most prone. And then the actual, to be honest, my alma mater, MasterCard, is probably the next in line for the biggest hit. If you think about it, I mean, they're probably at risk at least in the US. I mean, globally a different scenario, but in the US, they're probably the next at risk.
Yeah, I did see the volumes that came out, and it actually was indicative of the stock prices. MasterCard took a bigger hit the day after the announcement than Visa. It's the debit volume does come off. That's how Capital One has branded with MasterCard and their debit.
Yeah.
And also, although the volume overall is fairly even on Capital One, they issue both MasterCard and Visa. The percentage of MasterCard's volume that's tied up with Capital One is greater, so they'll take a bigger proportional hit. So they did take a bigger haircut that first day coming out of the curve.
So we've definitely established that this is a great deal for both organizations. So now let's talk a little bit about what this might mean for the credit union market at large. That obviously the credit union industry participates in, and is already, in my opinion, and anybody who wants to fight me on this one, I'll be a little provocative here, but I just, I don't know of I haven't seen where credit unions have really managed to compete with the big card players, particularly in the rewards areas and all the technology and what they've put into it. It feels like it's always been the value proposition of the credit union cards have always been the rate and the service of the credit union, not necessarily the rewards or the ubiquity of the card or anything like that, or even the tap of the PIN. We're just now getting to those things. So my concern is that at risk? Can they now compete with us on rates where they could before? So Glenn, and give me any other thoughts with regard to how this may affect the industry.
I kind of go the other direction on that one, that there's been, because of this, I think there's been more visibility out there. A couple of reports have been published, and we've known it for some time, as you just said, but it's getting more publicity that smaller institutions, certainly including credit unions almost entirely, but smaller banks as well, tend to charge lower credit card rates than the bigger ones. Now, so that's one thing. If people kind of start waking up, and in an interest rate environment where it's getting a little bit higher too, people get even more price sensitive, then that might drive people more toward the credit union side. If, because they're consolidating, Discover and Capital One get a little bit less aggressive on that front, and maybe knock theirs up just a little bit, then maybe that's one more opportunity. So I think the visibility of the smaller institution may have a marketing opportunity there as well. Then you've got the whole thing with the Credit Card Competition Act. If you start, slicing off some merchant discount rates there, that's where you fund these rewards programs from. So whether it's a matter of the credit unions coming up with better rewards programs, or whether it's the reward programs that the larger banks are offering today might not be sustainable anymore, it still seems to me that there's an opportunity that's arising for credit unions.
So JP,
go ahead, Joe.
One quick question for you, Glenn, and that now I was trying to think about the actual balance sheet implications. Right. So given kind of the liquidity crisis state and, credit unions having to compete for loans and deposits, I haven't really factored in what does the fact that Discover had a bank
Yeah,
in this, does that actually help them on a balance sheet equation? Hadn't
I
thought through it.
I've seen some analysis that says that they have a very stable and heavily insured, I think it was 85 billion. It was a decent sized number. And the belief is that it does actually provide some additional stability for Capital One as well. So yes, it sounds like the answer to that is yes.
So let me, and I was just going to go there. That's actually what I was going to ask John was, okay, so Capital One really is a full functioning bank, right? I mean, they've got a range of banking products. As far as I know with Discover, their only banking product is the Discover Cashback Debit, right? I don't know that they have any other financial instruments related to that bank that they offer. I haven't seen any traditional lending or anything like that, but Capital One certainly provides those services. So, and I got a quick question that'll blow your mind about PayPal. We'll come back to that. But so does that mean that Discover, how many of those Discover members are also utilizing, services there that get kind of roped into this and then offered those banking products? Or do you, as you mentioned, the bank, from what I can see, the bank is very much dedicated to that cashback debit, and that's really it. But am I off on that? Are there other banking products that I'm not aware of?
They were involved in student loans, but I understand they're in the process of selling that off already separately. So that's a separate
Discover, okay.
transaction that was being peeled off.
Yeah. I mean, they proclaim to have traditional DDA and checking. And, the interesting thing, our buddy Dan Gasoffi, is over running innovation for them. But what their scale and current mix is, and I'm certain part of their reason for selling was, not being able to penetrate that. But, they claim to have some of those services.
So with that in mind, let's go back to another thing. Doesn't PayPal and Discover, they used to be together a little bit. Now there's a deal, and they use a lot of Discover's Pulse network for all of that debit transacting, don't they?
I think that was the deal that got PayPal some additional kind of reach at the merchant acceptance side, wasn't it?
It was.
So not only is Capital One potentially acquiring interest in the Discover platform, but in the biggest digital wallet debit platform on the planet. I mean, because my understanding is, the people who are using PayPal as a merchant payment process, whatnot, and other third-party things right on the PayPal rails as well. So by sort of the transitive property, they're going to get access to that. So let's try to come up with some key bullet points on what this possibly, let's say it goes through. What does this mean for everybody on this call who is managing a credit card portfolio, Glenn?
That's a good
What's
question.
the first thing they do,
Well,
do you go after Discover? Do you go through your bill pay and find everybody that's paying Discover and go, hey, you don't want to be merged into Capital One. They're crooks. Come back to us. Balance transfer.
Well, there's always
John Ainsworth said they're a bunch of crooks. That's what I would say.
They do say they're going to keep the Discover brand. They do believe there's a strong. Oh, actually, one more thing before we get to that question. I found this to be really kind of fascinating the way it was positioned. One of the reasons they said they're not going to migrate the credit card volume over as quickly off of the Visa and MasterCard networks is particularly overseas. They acknowledge there's a merchant acceptance gap, for Discover. They work on that. They then chose their words very carefully, and they did not acknowledge a merchant acceptance gap in the US, but they did acknowledge the perception of a merchant acceptance gap. So therefore, they're afraid they would scare people off by moving them to Discover. Now, if it's just a matter of marketing, I don't know how that's going to work out, but they did say that, they basically gave a number that I went back and looked was roughly half of their portfolio. They might migrate over to the Discover network on the credit card side by 2027. That's a pretty slow moving train. So it'll be kind of, but then again, having said that, we may still be dealing with the acquisition by 2027, the way sometimes these things go. Yeah, just so John says they claim they have 99% acceptance. And if that is true, then the question becomes, then why do people have such a misperception of their acceptance rate?
And it is a US number, so specifically used, but
Well, and so John, would the other impetus for be that Chase owns what? Some good amount of the Visa rails, right? Like they actually own it, not like they rent it. They're the only ones that don't have to put a Visa bug on their card. Um, and so would it also be that Capital One would, obviously doesn't want to give business to Chase, um, because because they own so much of those rails, they're obviously benefiting from all that network,
Well,
all
it's
that network
interesting.
fees.
Jamie Dimon had always publicly declared that he wanted to buy an actual payment network, right? So they have a network in terms of connectivity, right? Because they've got such a large part of the acquiring piece, but you still have in that the four-party model, right? There's still a merchant, there's a merchant bank they happen to be, but you still have, the networks in the middle of Visa or MasterCard. So they still got that kind of third-party dependency.
Mhm.
So I'm really interested to see what their play would be. Same thing for Citibank, right? They've always proclaimed they wanted to basically own their own network. So
Mhm.
there's still but I think Glenn, your original point, I mean, Chase and Citi still have strength and size, So it's an interesting one though. It's an interesting one.
And I mean,
So
I have to believe that they, if we think this deal is going to get pushed back, just imagine if Chase had tried to buy Discover. On the other hand, I mean, when you say, how many more networks out there that can be bought?
Yeah.
There's not a whole lot of options unless someone goes and buys China Union.
well, I got a question about that. I'm gonna hark back to I was in the room when a whole bunch of guys who were really important in this industry way back when, Ed Callahan, for those of you that use Callahan and Associates, that's the guy. Bucky Sebastian still around, uh, Tom Sargent, all these guys, and they were doing the CEO thing, and I got lucky enough to be there. And I think it was Bucky who piped up and said, at the time, Discover was having a problem with Sears and the whole nine yards, and he said, "Why don't we buy Discover as an industry, as a Canadian industry?" I think Dave Serlo might have been present. He was the original CEO of PSCU at the time, and it got tossed around a bit, and then it got dumped. But let me go back and ask John, what's the barrier? Like, it seems like the benefits for the credit union industry owning a network as a whole would be overwhelmingly positive. And I know PSCU sort of was an attempt to do that, but what are the barriers today of the industry or anybody starting a new network?
It's a great question, and I don't have the answer to that, just to be candid about it. But you already have gone where I can guarantee you, the whole co-op play in this now just takes on a whole different opportunity
Yes.
connotation. So, Chuck and those guys are sitting back thinking, I mean, this is an interesting timing of all that. So, I don't know, Glenn, you may be getting a phone call really quick to come back into the vault.
Well, I talked to Chuck. Oh, go ahead. Sorry.
I don't, I don't want to be, the naysayer on it, but I mean, it's just, as they said, it's a very difficult thing to build a network. It's if it were easy, I think it would have been done many more times. It's that, the two-sided beast where you've got to get the merchant acceptance, and the merchants aren't going to take it until you show that you've actually got the credit cards in place, and the credit cards are useless unless the merchants are going to accept it. So at the level of scale that you would need to compete with these, big four, for lack of a better way of thinking about it, it's a pretty massive undertaking.
Well,
let me
and the
just back
merchant,
this up, though, to a question that's fairly naive, though. I mean,
Mhm.
aren't we just talking about, with the acquisition of Discover's payment network, the potential for greater competition that would drive down pricing from a credit union standpoint?
Yeah, I think so.
Could be.
Yeah, I think that very much could be it. I'm trying to think through. There's a larger thing at play here, and I was just about to get into it here, Ty. So the merchants have no upside to acquiring more networks. That's just more fees for them to pay, and they
Right.
have no benefit. What they do have a benefit for is displacing the current networks, and you're seeing that over and over again. Walmart would love more than anything not to have a 16-digit number involved in what they do. And I think that opportunity is about to present itself. And again, back to what John was talking about, but we had a long discussion, Glenn and I did, about FedNow and merchants. And Glenn, you want to recap that a little bit, what you were talking about and what you think might happen there?
I'm not sure if it's the same thing that you're referring to, but I mean, the one piece that's still floating around out there is pay by bank. Is that where you're going, or where do you think?
Yeah, so the Fed now, if a merchant were like Walmart were to say, Fed now's my new thing because I get the money instantly, and I'm going to give a discount to my Walmart, customers who use it because it's in my benefit, and they don't have to settle because the settlement is what the network exists for, right, John? That's part of the process. Besides, they would argue the validity of the payment and the holds, but who needs a hold if it's real time? So it either works or it doesn't. So my question is, what if merchants, there's no, it may be that the time is ripe for PSEO Co-op and these kinds of guys not to try to get into the old network business and recreate a Pulse or something like that, but there may be an opportunity to basically displace something with a better win-to-win ratio, directly to big player merchants like Amazon and whatnot. I mean,
The only other thing I was going
that's
to mention, JB, the quiet part in this is we haven't heard a lot about Fiserv, right? We haven't heard a lot about Frank. And so if you think about the FDR acceptance network, I mean, that's probably the next one at scale. And if you think about how many of those portfolios of Fiserv are actually being, supported now in terms of PSU, et cetera, that's a wild card for me in terms of back to credit unions. How might that be pieced together? Because really, if you think about it, you've got WorldPay, which was kind of the FIS, which is, at scale, but FDR is the big one that I think, we haven't heard a lot from Frank yet, but I suspect that will be coming pretty soon because he's the one also at risk of this, right?
That's a great point.
because
It's only been 8 days, and I mean, I think and I don't know how much they were tuned into the fact this was coming, but as we saw the last time we had, it was kind of the cascading effect of these transactions. The first time and the last time around, the big surprise was Fiserv and First Data, and then that got pretty quickly got followed by FIS, WorldPay, and then Global Payments, TSYS. You could be seeing something like that again, although they're probably not in quite as literal a sense in terms of the combinations, because again, there just aren't enough networks out there to do that. But some type of a response along those lines, John, I think you're right.
So John Ainsworth, if the displacement happens where Citi gets to takes hops out of its connection to merchants and has to pay less, how many of those hops are potentially things that credit unions earn on in between with regard to interchange and transactions? And does that begin to eat into those funds or that revenue? And that's an all play for Glenn or John or anybody that knows.
Yeah, and Glenn, you probably have a more current perspective. I mean, but everybody knows interchange is in a race to zero, right? You're not seeing interchange increase. The merchants are driving that to the race to zero. So what the impact is, I'm not quite sure. Glenn, you may have a better perspective, but
I don't. But I think that's where you kind of get into that bizarre dilemma. To create something new, it would be first off, the merchant aspiration is obviously zero. And as soon as you start getting into the conversation, you start realizing, no, we still do need these, call center supports, exception handling, blah, blah, blah. That costs money. Okay, so we actually have some costs. Now let's figure out how many basis points it is. Probably someplace south of where we are today. But even if you did come up with, as you said, John, kind of a fairer kind of, balancing act between the two, you still wind up with today's players going, no, wait a second, you want me to sign on to this that automatically cuts my existing revenue base by X, as opposed to letting it gradually decline. It becomes kind of one of those prisoner dilemma type conversations.
I think, JB, one interesting point I just wanted to make, you brought out, I think in the opening statement, when you brought up actually, your Discover account, this even magnifies the race to the top of the wallet. So this whole digital back in terms of if I were sitting in a credit union spot and I was looking at my card base, the stakes for being top of wallet actually just amplified. And I think that, we've said that for however many years, but it just continues to be, even more crucial now,
Well, particularly in light of mergers, which this is the year of the merger, man. The consolidation is happening. I mean, I'm just seeing so many, and not just mergers with credit unions, but banks too. Credit unions buying bank branches. The challenge with that is how much of that revenue comes from, when you transition those cards over, and John, you've known this for a while, but when you bring those bins over, you risk losing any top positions. Like you saw, my Ent was in the default on the Amazon. But you risk losing all that. And frankly, because of the timing between getting the new card, a lot of them don't come back. And it's a big eat into the revenue opportunity of those card bases that are being merged. But my concern is that they flip a switch and nobody knows this, but there's enough hops that were being hit in the Fiserv model or the FI model. They're coming back through co-ops like PSU and co-op that suddenly the check you get is 20% less, and you didn't know that was going to happen. That's the analysis. I think I might talk to Chuck about that, but that's the analysis I think that needs to be done. Because if they're skipping hops, then presumably some of those hops pay out to us as being owners, part owners of some of those networks. Particularly, I think the Credit Union network is nice. I think portions of that are owned by Credit Union Space, and there's revenue that comes that way, if I remember right. I have to go
Like
through
Athens?
I used to have a big, what's that?
You thinking of Athens?
Athens, yes, Athens, which is Navy, and the EDS originally owned that and sold it over to the Credit Union network. That's a great one. Athens gets the crap used out of it because it's all military folks. If you're on a boat, that's your only choice if you're in the Navy. So yeah, I just think that all of a sudden things could up in the wheel horse. So let's talk more about what Credit Union should do. So John, I love your points there about like, hey, you may have cards at risk, but like, what's a cool, if it's me, any change is bad. So I tell them it's bad and they should transfer all of their money to our card. They should anyways, because it's a lower rate. But
I was going to say, I don't even know if you need to be that aggressive on it, but as you said, take a look and see who's paying, assuming that you've got the DDA. If you're making, monthly payments to your Discover card or your Capital One card, I don't think you have to even be as, forward as going, hey, did you see the mess that's going on over there? Just, hey, are you aware that we've got a card? And are you aware that, don't even take our word for it if you don't want to, but other studies show that, smaller institutions like your credit union offer a lower rate. Don't you think you ought to take a look? And,
I've often wondered why we even let them pay other credit cards before I think when they try to do it, we should stop them right there and go, hey, what are you doing? That's like blasphemy. I think, we shouldn't let them use bill pay or any of that crap to pay any of these other people. I remember one of my favorite things when I first started at Westcom was they had this feature. I don't know if it's still on, but I had to write it into the new home banking, which was if you were late on a loan, you weren't paying anybody else till you paid them first. Like bill pay wouldn't go through nothing, even if you had the money. And I don't know if they still do that, but it feels like if this truly is a co-op and participation is what it is, then it feels sort of wrong to let them pay competitors, or at least to not try to get them on the way in the door. But that's a whole nother soapbox. But okay, so one move is to be ready from Durbin 2.0. Yeah, Ty's mentioned it. One move is to use the attention that's being brought to this as a balance transfer option for Discover card users. So that's one good, I think, thing I would do for sure, and possibly Capital One. I'd say I try to come up with a cool name for it, like the Capital One Cluster Discover, or I don't know, something like that. You don't want to be part of the cluster or whatever they call it, the credit card apocalypse. You should come to us. I think the second, what's the second thing? Does there any financial should that people should be preparing for? Does this, do we in our projections, do we look at rates as being more level, less level? Because they're all dependent upon sort of the Fed, as well as whatever the big players like Discover and the big credit card players do as sort of the basis for our rates. That has a cascading effect. Is there something there, Glenn?
I'm not sure I've got a perspective on that. I don't know. I mean, I think that there's definitely something there, but I mean, I when you just, if I want to dumb it down to where, if you're talking about, you know, how the member is going to think about it, because we give way more thought to this stuff than any member either does or ought to. You know, what is the, you know, what is the value proposition that's going to actually get their attention, and without, you know, causing their brains to hurt, because, you know, it's just way more time than they really need to spend on this stuff. And that's, other than kind of just, I don't want to, like I say, you know, I see your point about, you know, fomenting fear, uncertainty, and doubt around Discover and Capital One. But if you just kind of
I didn't say that. You said that. I just
if
said,
you at least get it on the table and then kind of remind people that, hey, you know, we've got these offers too. To me, that's, at least at this stage of the game, and to the point that Ty made, and I see Sarah gave it a thumbs up too. I'm really interested in why we haven't heard from Dick Durbin on this yet. Because, you know, yes, you know, tell the lawmakers, you know, not to pass. I'm sure that will be very, you know, front and center.
That's why I put it out there, Glenn.
Yeah. But at the same time, I'm really curious to see, you know, you could, and I don't know, I'm curious if America's credit unions is kind of preparing that, you know, on a real-time basis as a talking point, given that we've just had this pop up over the course of the last week. But, you know, we had our own reasons why we thought that was a bad idea before, but it's even a weirder idea now if the market's taking care of the problem itself. And that's why I think, you know, is Dick Durbin so hell-bent on, you know, getting that legislation through, that he doesn't like this deal just because it might complicate his possibilities of getting that across. I don't know. That's just pure speculation on my part.
I fully
Okay,
okay,
thought
so
by
I
this
want to
point-
do, but
I was gonna say, I fully thought by this point he would have already issued a position paper on it.
Yeah, I mean, especially after Elizabeth Warren came out on day one.
Mhm.
Well-
His silence is very kind of telling.
Well, let's do this real fast. I'd like to do a quick poll. So here is the poll. Very simple. Just go into the chat. If you think this move is good for the credit union industry, then the answer is 1. If you think it's bad for the credit union industry, these guys merging, put a 0. And if you're indifferent, think it doesn't really matter to us, and who cares, put 2. So remember, 0 is bad, 1 is good, and 2 is indifferent. Okay, so far we got a lot of bad.
A lot of
Scott is indifferent.
Now we're the indifferent category.
Yeah. Jim Yetz, who worries me right now because he's dressed like he's part of the FBI or the CIA or something, says it's indifferent. So most people are saying, hey, this is indifferent. Time will tell. But, you know, one of the worries I have is that old Microsoft saying, right? We tend to overestimate the near term and underestimate the long term. And I think your point about this carrying into 2026 and maybe further is very valid. It'll give us plenty of time to react, but or maybe Dick Durbin isn't talking because he's like, I'm just going to validate this. This sounds great. Let's get it down to like 2 cards, and we'll call one the Durbin card and the other whatever the other one is.
I want to be clear too, because I put 2 myself, but that 2 is not, I don't want it to be interpreted as, who cares? It probably in my mind is a net neutral, because there's positives and there's negatives, and they probably balance each other out. If you just totally, you know, sit on your hands, it's going to be negative. But if you actually take make sure that you act on the positive stuff, you can probably keep it to be a neutral.
Yeah, I mean, if it drives down pricing because of greater competition, that works in our favor. If interchange gets chewed up, it works against us. I mean, we just need to know more.
Yeah. And the other problem or whatever is, you know, in the best case scenario, this is going to close at the end of the year. This is a very, you know, slow moving train. Will probably take longer than that. The one thing we haven't discussed yet that I find really interesting, and some of the reporting on this was wrong, but I went directly to the 8K. If Discover gets a better offer and starts to pursue a different one, they owe $1.4 billion to Capital One. If this deal doesn't go through because of regulatory concerns, Discover doesn't get anything. And I can't imagine what kind of damaged goods they would be, especially if this drags out for some time. And then suddenly people say, oh, never mind. And they're off on their own, you know, having lost that time, having that whole, you know, kind of environment out there where people knew that they were basically being subsumed. And then suddenly they have to, you know, suddenly kind of fend for themselves again. That's
Well,
a
I was
pretty
curious
scary
about
thought.
that in the context of the terms and conditions of the deal, because the shareholders of Discover are getting a 26% premium on their share price, but they come up as the minority holder, and they have no protections, like you said, Glenn. And so I'm curious what was driving it. I mean, something about that starts to tell a story that has me wondering about what's going on behind the scenes at Discover.
I had the same reaction. It's like, well, they were certainly not negotiating from a position of strength, that was the best they could do. I did see, and Sarah, I don't know if you're in a position that you might know this, and it really only applies to big deals though. I did, they were making comparisons to some other deals, but supposedly if regulators kill the deal, typically, according to the CNBC article, it's not all that common for there to be a breakup fee, but that puts the acquired entity in a pretty precarious position. The more unlikely it is, or the more uncertain it is, that the thing's going to go through.
So,
And based on the stock price, you don't expect it to get, you don't expect the stock to go up the full 26%, because you have to wait till the end of the year to collect, and there's always the uncertainty, not to mention the time value of money, et cetera, et cetera. But it went up even less, and I've tested that with a couple of people I know on Wall Street. It's not an insanely low number, but it went up. The amount by which the Discover stock went up definitely shows that the concern about this ever closing is out there in people's minds.
well, guess what? We're giving away a Discover card. No, I'm just kidding.
Does it have a balance?
Yes, it's mine. And
43
if you could
cents a
pay
big
it
order.
off, I would be so thankful. Well, I think it's a good discussion. I just, I felt like it was something that was worthy of a town hall discussion. Clearly, it's got some more time, but in lieu of the GAC and what Ty brought up, I think that all of these dots are getting connected around payments, and payments is something that's very much on folks' minds lately, as we sort of enter into this new era, particularly with AI and fraud and all the other things that are happening. So that's a great discussion. Thank you, Glenn. Thank you, John. I did not give John zero heads up. In fact, nothing. I just dumped him in the middle of this to see what would happen to him. And as always, he came through and really gave us some great information. So thank you for that time, John. And he has a big sign that says Bonify behind him, and you know where to find him. So that said, it's time for the Scott Mills Agency Mills Super Bonus giveaway. So for those of you, we're giving away something cool this week. So check it out. Now, I don't have one of these. I tried to order one, and I found it. It's called a Plod Note ChatGPT empowered AI voice recorder. It could stick to the back of your phone, and it records your calls, it records Zooms, it records pretty much everything. And then it turns it into these mind maps and summaries and all this other stuff. And we thought, well, seems pretty kind of innovative. Let's get one and give it away. So today, some lucky person is going to get one of these. Now, the important thing is that you come back to us if you win it and tell us about how it works and what it is, and maybe even demonstrate it on the show. I'd be very curious. That said, some rules. The first set of rules is that you have to work for a credit union in order to be in the wheel of Plod Note here, in the wheel of this. And that's pretty much it. Those are the rules. So if you can put your name in, and I think that all the folks that are here, if anyone's doubled up by retransmitting, these, just let us know, and we'll get to doing the giveaway here. So I'm going to turn it over.
Just to be clear, I think we do allow banks as well, if there are any banks that were brave enough to join us.
Yes. If there's a bank on here, put your name in.
Hey, that slide said FIs too, man.
Yeah, don't worry that you are surrounded. That's not a problem for you.
I'd be much more worried as a credit union member walking into a banking conference.
Yes, big time. Yeah. So I'm going to hand it over to my team, and we thank the William Mills Agency for this opportunity, and it's been fun to do this every week. So, all right, lay it on us.
Am I still building the
And
wheel?
are they building the wheel? Where are they? Melissa? Elliot? One of you?
I'm here just a moment. Madison usually does this. Hold on.
Okay.
If you had
Right.
one of those devices, it would have already been done, right?
I know. I should have just given it to the AI. Did anybody see? I'll just really quick aside. While they're getting this going, did anybody see what happened this week on ChatGPT?
No.
It went insane for everybody for about 4 or 5 hours. And the social media posts are amazing. So if you haven't seen it, I'll bring up some of them because it was nuts. So it went temporarily insane. I'll put this in the chat for everyone. And there it is. And so I'll share the screen. The stuff it said, Glenn, was awesome.
Shakespearean nonsense and rambling. Awesome.
Yeah. And so it just started like here's one. Honey Nut Cheerios. So this is somebody who asked a question about feeding Honey Nut Cheerios to their dog. And it just went nuts. It started off okay, but then it slowly just got more crazy over time. And it started talking about all kinds of crazy stuff. Hound festivities, you might consider steam hoofed, laced inline pickoffs like dog head rattle and fresh vegetables. I don't even know what that means. And then for some people, it's like switched in. Here you go. More. It just kept going to the B. It started talking in. I don't even know what language this is. And the weird part is, it didn't do this for just one person. It did it for everybody who was using ChatGPT at the time. So, yeah. If you want to have some fun, go look up a couple of
Did they
these.
say were they hacked, or did they come up with any?
No, they just I'm assuming it's kind of like when home banking goes down, like somebody ran in there, repressed the button, and rebooted it. They were like, "Whoa, somebody reboot ChatGPT, it's gone off the rails," and that's what happened. So, yeah.
And Madison will be
All
done in
right.
just a moment. She's putting the names on the wheel and she'll bring it up
Okay.
as soon as she's ready.
I think she's got
All
it.
right. Well, I see she's brought it up. It looks like she's still putting names on the wheel, but we'll get to our giveaway here in a second. We still have a few minutes, but yeah, I thought I meant to mention that to you, Glenda, for this. I just
I
thought
did
it
not
was.
hear about that.
Oh,
I will mention for next week, this coming Tuesday, I just recorded what I thought was a fascinating podcast interview with an AI futurist named Zach Cass, who was one of the early employees. He was the head of the go-to-market group at OpenAI. And I saw him speak at a conference, the Deluxe Client Conference, earlier this month. And I was pleasantly surprised that he was interested in joining us. And I got a good 15-minute interview with him that'll be up next week. My favorite little takeaway that he had, even though he's an incredible optimist with regard to the potential of OpenAI, of generative AI overall, he admits that his number one concern about it is it solves enough problems that human brains will no longer have to evolve going forward. That strikes me.
that's
as
good
a
because
minor
mine stopped
concern.
evolving a long time ago, so that works out.
That's
I-
disconcerting. That's just disconcerting.
Yeah, exactly.
Here is I put in ChatGPT's ChatGPT's response to this. They basically said it was lost in translation, but who knows? All right. Well, all right. Let me know when you guys are ready on the wheel.
I think we're ready as long as everybody who wants to be
Does
in it
anybody
sees
else
their
want
name on
in
the wheel.
on the wheel? Put your name in if you want in. Now's the time. Go once. Going twice. Not seeing anybody. Spin the wheel. Spin. We should all say it together. Spin that wheel. Isn't that what they say?
All righty.
How many
Here we
of you,
go.
oh, wait. There it goes.
Oh,
Oh!
Good job, Veronica.
All right. Look, I can make hold on. I'll get some yay, Veronica, for those of you. Or maybe just some balloons for her. There you go.
Oh, there we go.
Anyways, very, very cool. And congratulations. I hope, Veronica, you'll come back and talk to us about how this thing does, or if you wind up putting it in a Faraday case and hiding it from yourself. If it does attempt to take over, know that you will be signing a disclaimer that basically says that we are not responsible for anything that the AI does to you or your family. So just heads up on that. And with that, give everybody back 5 minutes. Thank you for taking the time. John, I'll give you a call a little later. I got to run out. But thank you for just being flexible enough to jump on and give us all this great information. And thanks to all of you that join us every week. Join us soon. We're going to be out at GAC next week.
If you'll be at GAC, give a holler. If not right now in the chat, just drop us a note so we can track you down.
Oh yeah, we'll be there.
And thanks to all of our sponsors, and especially the William Mills Agency. Thank you so much. And we'll talk to you guys soon.
Have a great week.